Hi there, welcome to Kneppy Invest and welcome to October 23, 2024. We have about 42 minutes left of trading today. And to be honest with you, I'm going to classify today as a pretty disappointing day. We do see some of the indices up slightly, tech down a fair bit, resource up 0.11%. I expected better. I expected a pretty good green day. I expected our indices to be up 0.5% because of the hissy fit we had yesterday, down about 1.6%. Still don't understand why we were down big yesterday. There was no reasoning behind that. I have heard and read some hypotheses, some theories, some reasoning behind it, but a lot of them were just conjecture. Don't know. And so I thought maybe the Australian investor or the market had overreacted yesterday. So I thought maybe a bit of a bounce and not much action on overseas markets overnight. The NASDAQ was up slightly. Dow Jones down slightly. When I say down 0.05%. So nothing really there. And maybe just no confidence right now in the Australian market. Or maybe Australian investors think we are a little bit overvalued. And I actually can see that because, again, if we go back to the XJO, we are near the top of the trading range. In fact, the last 6 days we're above it. Now we're slightly below it. And maybe that's the simple reason. We're just a little bit toppish. Maybe that's all it is. Sometimes we don't need reasons for the market to drop 1.6%. Could be just a little bit of negative sentiment. That's it. Okay, so the agenda for today's video, we'll go through best and worst performing sectors, indices, companies, top 5 stocks of the day after that. And I have some doozies for you. I'm trying to think if there's any positive ones here. 4 negative ones and 1 positive one. The 1 positive one, I put in number 5. This company did release their trading update or a trading update after markets had opened. But the other 4, I expect all 4 companies to be down a fair bit. Few down massively, in my opinion. One of these companies has decided to delist off the ASX because the management think they are undervalued. Well, now the valuation of this company is even more suppressed. And this always happens. Anyway, and then after that, maybe I'll look at some of your comments if I have time. Okay, so before we have a look at the ASX today, I'm just going to go through trading economics and capital brief just to see if there's been any news flow today. Actually, I am working tonight, so I did have a nap this afternoon. Yeah, I took a nap about midday, woke up about 2 o'clock, and I haven't really had a look to see what's happened since then. Now, nothing of massive note here. IMF lowers global growth forecast for 2025, down 0.1 percentage point from July, so that's not a big change, but it is down a little bit. China stocks gain for 4th session. Oil falls on higher US stockpiles. It's really interesting. Oil rises, oil falls. Oil rises, oil falls, just up and down like a yo-yo. UK public sector borrowing widens in September. And South Korea consumer morale improves to 3-month high. A 3-month high. That's massive news. Dollar climbs higher to 2.5-month peak. 2.5-month peak. Woo. Now we're talking. Okay, so now I'm going to go to capital brief just to see if there's been any news flow, any sort of recommendations or that sort of thing that I might have missed. For instance, apparently Alternate shares have been down or are down, extend losses after profit warning. Let's have a look just to see if there's been any bounce. Down 4.35%. That's probably understandable. I thought the share price would have been down more yesterday. And Stanmore Resource shares climb as Q3 results impress analysis. Wasn't that yesterday they released their results? So up 1.99%. That's just a little bit noise in my opinion. We can move on. Ventia signs $125 million contract. I did not read that. I'm a shareholder of this company and I did not read it. This must have been, it was not marked price sensitive. And Capital Brief believes it was sensitive enough to put it into their news section. Perseus Mining shares climb on reaffirmed guidance. So maybe the market was thinking the guidance would be downgraded and it wasn't. Tabcorp dips as leadership notes poor share price performance. And that's a pretty big no-duh. Let's have a look at Tabcorp's chart It's an ugly looking chart, and it's the downtrend. In fact, share price is up. Capital brief, share price is up. Just shows you that sometimes you do have to wait a little bit. But otherwise, the Tabcorp chart looks ugly at this point in time. I think we can move on. Oh, MA Financial shares rise on third quarter AUM growth. This was a possibility to get into my top 5 stocks. So probably would have come in at number 6 or number 7. So didn't quite make it. And I don't think the shares were up all that much, 2.64%. But the chart for MA Financial looks brilliant right now. Beautiful takeoff after was it a good result at the yearly? Yeah. On the release of their August results, share price on that day increased 16.3%. That was a breakout. I think that's confirmation just by looking at that chart. This was a breakout. This should have been an announcement I hopped on because I could have bought over the next 6 days because the share price went sideways. Exactly what I'm looking for. So sometimes I do miss companies' charts when they break out. And this was one instance when I did miss it, and share price has rallied about 20% since then. And it's really interesting. The share price of this company all over the place because back in February, when they released their previous results, the market hated it. And then when they released the results in August, the market loved it. All over the place for MA Financial. And anything else here? Oh, Mirvac rallies on target price upgrades from Macquarie City. Whatever. Mirvac. I don't care about that company at all. And Codan shares tumble. Okay, I shouldn't talk about Codan because it is in my top 5 stocks. Net wealth shares drop on Morgan Stanley downgrade. And Boss Energy shares fall as ASX uranium stocks extend losses. Funny enough, Boss Energy did release their Appendix 5B today. And they are operating cash flow and free cash flow positive. So down a little bit. So that is exciting. So let's have a look at Boss Energy before we go to the ASX today. This company did not make it into my top 5, but receipts customers 23.4 million, operating cash flow positive, almost $10 million, and free cash flow positive as well. So cash actually increased. Well, actually, no, it decreased a little bit. And the main reason behind that was mine development costs, which is okay. Where's actually the operating cash flow 9.5, investing activity 6.5 negative. Where's the other negative here? Effective movement in exchange rates on cash held. Okay, I understand now. So it's just a negative exchange rates for Boss Energy is why the cash on hand fell. Okay, so let's get to the ASX today. And again, sort of a blah day, disappointing day. I expected a little bit of a bounce. And if we have a look at the XAO and XJO during today, there was a bit of a bounce, or not a bounce, but it was up on open, maybe up 0.2%, 0.3%. But during the day, we have seen it gradually fall away. So maybe that's just a bit of negative sentiment overseas. Maybe the American futures are down, and maybe the Australian investor is expecting a bad day or maybe a negative day on Wall Street overnight. Maybe. So a lot of maybes there. Now, let's go have a look at the sectors and indices. And this is really interesting. Staples up 1.3%, discretionary up 0.49%. So the retail investor, the investor who loves retail, staples and discretionary have had a good day. Both of those sectors up. Meanwhile, IT down. Nasdaq was up, IT down. Energy and healthcare both had a bad day as well. I'm not going to have a look at what's happened there. Now, Treasury Wine I did notice Treasury Wines in Capital Brief. Where was it? Here it is. Citi upgrades Treasury Wine to buy. So maybe that's what's led to a bit of positive sentiment in discretionary today. Yes, I'm clutching at straws. And IT, WiseTech, don't know. Let's have a look at WiseTech, because that is by far the biggest company in that sector. It's down a little bit. I don't know. Anyway, gold's had a good day. ASX 20 slightly up. Let's have a look at the ASX 20. More than likely, maybe 12 companies up, 8 down. Let's have a look. There we go. I'm a genius. No, actually, no. I said 12 up, 8 down. Oh, I'm not a genius. 8 up, 12 down. Let's have a look at the best performing companies. More than likely, these are pretty big companies, the biggest companies on the ASX 20 because, well, there's a few reasons. And one of the reasons why only 8 are up, 12 down, and then ASX 20 is up is because some of these companies have performed fairly well today. Woolworths up 1.44% and Aristocrat up 1.35%. But if you have a look at the worst performing companies, that theory's gone. WiseTech, CSL, and Woodside all down by more than 1%. Yes. I think maybe the reason is some of the bigger companies in the ASX 20 are up today, like BHP, ANZ, and that has helped the ASX 20. Although Commonwealth Bank is down. I don't know. Many reasons. Okay. Let's have a look at the best and worst performing companies on the ASX today. Start with the top gainers. I'm excited to be looking at this because I have not perused through these lists before starting recording this video. The other things I did actually have a quick look, cover brief, but this one I have not had a look at. And I'm not seeing much to get excited at. Not much. The best performing company on the ASX today by percentage change is Venus Metals, up 38% on a fairly low turnover. A company called Eastern Metals, up 29% on pretty good turnover. I'm assuming this company might have released something. I'm not convinced they have, but they might have. Shallow high-grade gold zone intersected at Kelpie Hill. Okay, so let's have a look at the chart for Eastern Metals, or whatever it's called. Is this a potential breakout? And the answer to that is no. In fact, we have seen a little bit of selling today in Eastern Metals. And why we have seen selling? Well, it's pretty obvious. It should be obvious. Share price in a downtrend. A lot of shareholders underwater with this company. And when they see the share price rally, they are keen to get out. They're rushing for the exits. And we have seen that. Share price got as high as 4 cents today. Now it's down to 2.7 cents. Pretty good volume coming in. So this could be the end of the downtrend, maybe. I do like to see this peak in volume, and it's going to be very important over the next few months that Eastern Metals release maybe one other really good announcement. So I'm going to put this onto my watch list, my high volume spec, because this is high volume. Elsewhere, we have Larvotto Resources, up 22% on really big turnover. Let's have a look at Larvotto. I'm assuming they must have released something. Drilling results. This is yesterday. Drilling to test antimony and high-grade gold at Hillgrove. Not Hillgrove Resources. That's a different company. This is a project. Share price up 23%. Minerals down yesterday. Okay, so this is interesting. I would assume the chart for this company is just all over the place. So really good day 2 days ago. When they released the announcement, share price down, and now the share price up. This is an okay chart. I do like this chart. Nice little run. Then the share price went sideways. I love to see that. So share price rallied back in August. Then the share price went sideways for about 2 months. So no selling. That's a good signal. And then the share price has taken off again. So that's Larvotto Resources. Do I have this in my watch list? I actually have this in my high volume spec. Maybe I should go through my high volume spec watch list a little bit more often, because I haven't actually gone through that much since I set it up. And this is a reason why. This is a nice looking chart, particularly that consolidation period for about 2 months. Nice chart for Larvotto. And what else do we have here? There's probably a few other companies here that I'm just skipping by that might have released something interesting today. Mostly mining companies. Yeah, mostly mining companies, which is probably normal enough. Now by market cap, let's see what's been of interest today. Company called Sky Network Television. I'm pretty sure that's New Zealand pay TV or something. What did they release? They must have released something. For the share price to be up 9.5%, Sky confirmed as exclusive home of Max throughout expanded WBD a few days ago. Share price didn't do much. Why? It could be a recommendation from a brokerage firm. Don't know. Chart probably wouldn't look that good. Yeah, it's nothing of interest to me. Austin Engineering up 10.5%. They did release something the other day, Austin Engineering, if I remember correctly. It was yesterday. They had the AGM yesterday, and they actually did record some new customer orders on the 21st, 35 million. So let's have a look at the chart for Austin Engineering. There was a bit of weakness in this company. So this could be maybe the end in this little bit of weakness. Let's have a look. And yes, it is. So I actually did put a downtrend line on Austin Engineering's chart, and today it looks like it's broken out of that downtrend. So a positive day for Austin Engineering. And talking about a positive day, Findy up 8.45%, up to $6.29, up 1,000% in the past year. In fact, this is very close to being a 10-bagger for me. Yes, this is very close to being, in fact, it might be a 10-bagger for me because I'm pretty sure I held or bought shares in this company below that price. I have taken profits, so is it a 10-bagger if you're taking a little bit of profits? Not a lot, just a little bit. But yeah, okay, go Findy. Dropseat released some sort of update yesterday, another good day. This chart should look pretty good. I won't have a look at it. And Michael Hill International. I always want to call it Michael Hill Jewelers, up 7.8% on their AGM, I think, and a trading update. And that's where I'm going to end. Or Freelancer, up 11.8%. They actually did release what I thought was a positive update today. Now, it's a first for Freelancer, in my opinion. So third quarter business update, I'm pretty sure they were operating cash flow or free cash flow positive. And it's just, this company has just continually disappointed the market, and I suppose myself as well. Never been a shareholder, but the chart, okay, so good day today, but the chart looks tragic. This is a tragic looking chart for Freelancer. Yes, no interest in Freelancer. Okay, so let's have a look at the worst performing companies today, the top losers. I expect two companies in my top 5 stocks to be near the top of this list by percentage change. And in fact, they've come in at number 1 and number 3. So Adacel down 36%. So I'll talk about Adacel when we get to the top 5 stocks of the day. Playside Studios down 30%. I'll talk about that company when I discuss the top 5 stocks of the day. 29Metals down 21%. I'll talk about that company when we get to the top 5 stocks of the day. It is in my top 5 stocks. I was paying close attention to 29Metals because share price or the chart starting to look interesting. I thought, oh, it's getting close. I'll just wait to see their quarterly results or the quarterly numbers, and the market hasn't liked it. LTR Pharma did release something today. LTP, was it today or yesterday? Yeah. Oh, I thought it was today. I might be thinking of something else. So we can move on. For some reason, I thought they released something today, but I was wrong. And that's about it by percentage change. Now let's have a look by market cap. MinRes down again. And that's about it. Nothing of massive note here. So we can get stuck straight into the top 5 stocks today. There weren't many companies that almost made it into it. It's like EBOS had their something, and MA Financial could have made it in their. Freelancer, I suppose, could have made it into the top 5 stocks of the day. West African Resources released their Appendix 5B. ECS Botanics released theirs. In fact, I might just have a very quick look at the charts for all these companies that released their Appendix 4C or 5B. So West African Resources, down slightly, but that's okay for that company. ECS, this was maybe a slight disappointment. I was hoping this company would be operating cash flow positive, and the share price is down 11%, so maybe a bit of a disappointment for the market. Boss Energy, we've already had a look at that. Did we have a look at the chart? I can't remember. And share price down slightly, but that's okay. A company called Talius Group. They do stuff when it comes in. I think it's software for nursing homes, something like that, or assisted living. Share price is below 1 cent, so I don't really care much about this company at all, just because of where the share price is. SomniMed, operating cash flow positive. This could be an interesting one. Share price is has been struggling, and not much action today though. Share price flat. And the other one was Hillgrove. So this is a new copper producing company. And whenever they release their Appendix 5B, I'm going to pay close attention. They are operating and free cash flow positive. Share price flat. So I think the share price will move up or down based off more of copper than their results, unless their results are surprising. Today, results were not surprising. Okay, so let's get to the top 5 stocks of the day. We'll start off with Michael Hill I just want to call it Jewelers. I'm pretty sure they were at one point called Michael Hill Jewelers. The ticker code is MHJ. But Michael Hill International, trading update. They did have their AGM, and they released a trading update separate to their presentation. I like that. This is a positive trading update. So group sales up 4.3% on last year. Same store sales up 4%. So this is exactly what you want to see. Same store sales up. They have operations in Australia, Canada, and New Zealand. Australia, Canada seem to be doing quite well. New Zealand, a bit of a laggard. I'm not sure what's happening in New Zealand, but things seem to be struggling in New Zealand economic-wise. And also some pretty good comments from Michael Hill Jewelers, the international CEO, whose name is not Michael Hill, is Daniel Bracken. As we prepare for the all-important Christmas trading period, the positive momentum we have seen the first 14 weeks is very encouraging. Now, I have read some expert writers who say you should never use the word vary. You're being lazy if you use the word vary. Use another word. Anyway, I'm particularly excited about the launch of our new pendant bar concept, providing a unique gifting proposition for Christmas. Couple this with next week's launch of our new campaign. It's a Michael Hill Christmas. So there you go. That's very cute. Anyway, so the chart or the share price or the market has reacted well to this particular trading update. Let's have a look at the chart. Is this a breakout for the company? The answer to that is no. Chart actually still looks pretty weak, even though the share price has rallied today. Share price still below the downtrend line that has been in place for quite a while. Has been in place since early 2022. Share price at that point reached a high of $1.50, so share price has dropped about 67%. But this is a step in the right direction, and it seems like when the company released something negative in May, 20th of May, share price dropped 22.58% on that day. So maybe things have started to turn more positive for Michael Hill International. Yes, I said the right name. Okay, so that's the only positive announcement in the top 5 stocks of the day. So let's have a look at the negative announcements, negative stories, the negativity, whatever you want to call it. We'll start off with 29 Metals, share price down 21%. Funnily enough, the share price actually opened at yesterday's close. So there wasn't an immediate reaction from the market. That's actually interesting. I did have a close look at this because, again, I did like the chart. I thought the chart was showing some promise. So I was very keen to look at the quarterly report because I thought this could be a potential breakout if their quarterly report looked good. I was not a fan of their quarterly report, but just because I was not a fan doesn't mean the market won't be. Now, if you just look at their so this company has a few projects, Golden Grove, is that in West Australia? But the Capricorn copper has been underwater literally the last few years because of really heavy rainfall. So I think that's north of Mount Isa. And based off some of the photos today, it's still significantly underwater. I'm not sure. Haven't been following it, but I'm not sure if this water's supposed to be there. It says pre-treatment of water in the MCD is in progress ahead of the 2024-25 wet season. Eek. Anyway, the main thing about this is if you just had a look at their Golden Grove, and actually I had a look at the Golden Grove initially without realizing it was just the Golden Grove, and I thought, oh, operating cash flow and free cash flow 42 and 26 million. Oh, that's pretty good for the company. And then I realized it was just for the Golden Grove project, but the company is still spending a lot of money for the in their Capricorn copper mine. Reduction of water levels on site remains the immediate term focus. No doubt. So I'm not sure how long they have to wait before we see that particular mine back into production. Now, as soon as I saw and realized, I was looking at just one mine, but you have to take the whole company combined to see how they have performed. So even though that first mine, Golden Grove, was operating cash flow and free cash flow positive, the whole company's not. And a pretty good giveaway here. By the way, this company does not release an Appendix 5B. This is just, pretty sure they don't. Yeah, they don't. This is just sort of activities report. So the bigger mining companies don't need to release Appendix 5B. They just need to release this activities report. And when I do release these activities report, the thing I like to look at is cash and cash equivalents and what's the other thing? And any sort of commodity they do have. So corporate and other, unaudited available cash of 60 million, down 25 million. Available group liquidity, 104 million, down from 130 million. Additional 20 million of debt drawn post quarter end from existing offtake finance facility. So that's what I read, and I went, oh, cash still dropping fairly quickly. And they do have somewhere here, it could be this one. Yeah, this one. Group cash and cash equivalents and group liquidity. So it's down from 85 to 60, but they've shown it's increased because they have drawn a little bit of money. So wasn't that good. So you can see a bit of free cash flow from the Golden Grove mine, but $23 million spent on one-off environmental compliance and water reduction investments through 2024, $7 million in installment payments and $6 million of copper costs, $10 million on debt service net, $4 million in hedging and other. So they really need to get that copper mine back into production. Yeah. Anyway, so this is one of the reasons why the share price is down. The market didn't really like this particular quarterly report. And so what looked like a promising potential breakout is now come to an end. The reason I thought this potential breakout is because the share price had moved to this really nice, a little resistance zone between about 55 and 60 cents. And I thought if the share price could get above 60 cents, this would be a really good move for the share price. But today has put that to an end. And a lot of the selling has come in after shares at open, which is actually interesting, which means there was an initial sell-off. So if you have a look at the 5-minute chart, yeah, there was an initial sell-off. In fact, maybe within the first 5 minutes there was, but not within the first minute, or not on open. So maybe within the first minute there was, yeah, within the first minute we started to see selling, which is interesting. Usually, if the market doesn't like a report, they sell straight away on open, in the opening auction. This didn't happen for 29 metals, and the share price has been dropping ever since. Looks like it's stabilized. Looks like it's found a bit of a floor at 44 cents based off this. There looks like there was a potential double bottom at 44 cents. So maybe a sneaky buy at 44 cents, maybe. Okay, let's go back to the top 5 stocks of the day. And coming in at number 3, we have Codan. Codan did have that AGM share price. Well, there you go. Share price was down a fair bit. It's just rallied through the day. This is going to be interesting. So when I started recording this video, share price was down 6%. I had a look before I started recording. Share price was down 6%. We have seen a fairly significant rally in the last 20, 30 minutes. I just saw that and thought, oh, that's a mistake. This is going to look interesting. In fact, let's have a look at the chart first. So 20 minutes ago, share price of Codan, was 57.7. Okay, we have seen a really good rally since midday. So it wasn't before I started recording this video. I actually would have looked at this before I went to bed. In fact, the low in the share price was near open at below $15. So yeah, we've seen a really good rally in Codan. So this is another instance of the market maybe a little bit overreacting on open and then the share price recovering. And one of the reasons that can happen is because some retail investors see something negative in their AGM or their trading update, and they just sell. They just panic and sell. Let's have a look. Now, apparently, according to Capital Brief, Codan share price fell. There it goes. Codan shares tumble as North America trading softens. So tumbles is not down 0.67%. In fact, here we go. Shares in Codan down 6.7% at 11 a.m. Yeah, 11 a.m. down 6.7%, making the worst performing company across the ASX 200. So it went from being the worst performing ASX 200 to almost, well, not one of the best, but definitely not one of the worst. So definitely a nice rebound in the share price. Not a lot of volume. However, you can see some really big volume, some really big buying coming in about 10 a.m. So not 11 a.m., 10 a.m. Oh, this would have been 11 a.m. Funny enough, that article would have been released right at the bottom. Yeah. And then some really big buying coming in. So we saw some big spikes in volume, and that's when the share price just took off. Anyway, that's really interesting. So trading update. I'm assuming there was something about the trading update here. I have not gone through this. Okay. I can't see anything when it comes to trading updates. So this is why you should go through these announcements beforehand, talking about them, because I just don't see anything here. That's some sort of acquisition. And usually if they do release a trading update, it should be mentioned. Anyway, I'll just believe what Capital Reef says, and there was just a little bit of weakness in North America. Yes. So what do they say here? At its annual general meeting, Codan Chief Executive Alf Inelio told investors the company is optimistic about its growth prospects in financial year 25. Okay. I'm not seeing any. Okay, here we go. And noted that while Codan's metal business Minelab continues to target high single-digit revenue growth in its rest of world division, it is observing some softness in North America. Okay, yeah, okay. Anyway, so this is a case of the market initially overreacting when the share started trading. And if we have a look, why is the volume like that? This is really annoying. I haven't been able to fix it. Just going to refresh, see what happens. It's going to the 1 minute chart. No refresh. That's annoying. Which means the volume is not adjusting when you change it from one time frame to the next. It's really annoying. This happened a while ago, and then I fixed it. Here we go. It's fixed now. I fixed it a while ago, and then it's just gone back to this. It's really annoying because when you go to weekly chart, you can see the volume is out of picture there. It's not adjusting. Anyway, let's have a look at the daily chart for Codan, and it's a good day. It's a good candlestick. In fact, the chart looks pretty good. There was no reason to sell on open this morning. If I was holding shares in this, there was no reason to sell. You just wait to see if the negative sentiment sort of translates to future days. Anyway, so I thought this was going to be a negative update for Codan, but the share price might even be up by the end of trading. In fact, indicated price when the closing auction, indicated price is 15.86. It closed at 15.87. And there is a chance the share price might be up when we go or finish the closing auction. What a good rebound for Codan. And overall, the chart looks pretty good. Okay, so the last two companies that have come in at number 1 and number 2, I don't think there's any positiveness when it comes to these two companies. So let's have a look at Playside Studios first. And the share price of this company is down 31%, down 49 cents, open at 50 cents. So you can see straight away, the market knew this was a bad update from the company. Open at 50 cents, closed yesterday at 71.5 cents. The share price today fluctuated between 54 and 45. So really hasn't dropped all that much from the open. So the company did release a trading update, operating update in financial year 25 guidance, and it was negative. It was really negative. And this is probably an example. So I have been thinking maybe I should be trading this. I've held Playside Studios for about 4 years, and I'm thinking to myself, I should be trading this because there was an obvious sell not that long ago, maybe 6 months ago, an obvious technical sell. Anyway, so all you have to look at for this particular operating update is, where is it? This little bit here, financial year 25 guidance. So revenue expected to be between 62 and 68. Last year it was 64.6 million. So relatively flat. But then EBITDA expected to be between 0 and 5 million. Significant drop from last year, 17.5 million. And cash balance expected to drop significantly from 37.1 million to between 15 and 20 million. They also talked about work for hire, a little bit weak. And they are spending a fair bit of money because will have these new projects. So the future of Playside Studios is dependent on these new projects or these new games they will be putting out there. Yeah, so where is it? They do list some of the program or some of the games they are releasing. But I'm just trying to find. Yeah. That's probably it. It's just based off this financial year 25 guidance. So I had a look at it and went, "Oh, gee, that's nasty. The market's not going to like this. The market doesn't want to see significant drops in EBITDA and cash balance and revenue flat. So that's why the share price is down for Playside Studios. Simple as that. A negative trading update. And I've mentioned before, trading updates, profit upgrades, profit downgrades, the most powerful type of announcement because it's new information. And with new information, the people who analyze these companies have to put new numbers into their machine to spit out a new valuation of the company. And so when these new analysis of Playside Studios, I'm not sure if there's many of them, when they redo their numbers, they're going to get a much lower number, much lower fair valuation because of these financial year 25 numbers. And the chart does look terrible. Now, the really negative thing for me for this company was on the 28th of May. They released something positive, but the share price fell on that day. Actually, it didn't fall. It fell during the day. That was a really negative one-day candlestick, and the share price kept on falling. So that was an obvious sell for me, a technical sell, but I did not sell because I thought, oh, no, the whole reason I bought this company was for the longer term, and I'm sort of kicking myself. And if you just do a technical sell right now, it's fallen below that. This is actually a day where if I was trading this, I would be all out. So I would not even be thinking about holding company or holding shares in this company. It's that bad of a signal right now, or that bad of a chart for Playside Studios. And the share price today, the last time it was this low was back last year. So we're almost at a 1 year low for Playside Studios. Okay, so negative number one, Playside Studios down 31.5%. Might be down a little bit more than that. Closing auction looks like there's a little bit of selling. Now let's have a look at Adacel. ADA share price down 31.91%. I'm surprised people are buying. I am surprised people are buying. Looks like there will be a little bit of selling on closing auction. Not a big selling, but one person wants to sell, one person wants to buy at 30.5 cents. So why is the share price down a lot? Voluntary delisting from ASX. So this company sells software to sort of like pilot training or something like that. Maybe it's aircraft people who track planes. I forget what they're called. Controllers, air traffic controllers. I think it's software for those. So not a massive total addressable market. And this company's had problems in the past. I think they lost a contract with the FAA at one point. I forget. Anyway, voluntary delisting from ASX. This is never positive. They try to spin it that this is a good thing for shareholders. They try to. They have to. I never understand why companies do it, particularly when they say they're doing it for valuation reasons. It's a joke. And I'll tell you why it's a joke in a second. So they're delisting and they come up with some reasons why. So limited trading and liquidity. Okay, this is an okay reason. They don't think their shares are traded enough. And to be honest with you, some days there's very little trading, but there's enough trading here. It's almost traded every single day. There's enough. If you want to sell your shares, you can sell your shares. It's not the worst, by far the worst you see on the ASX. In fact, if you have a look at the chart, and by the way, the chart looks pretty bad. We'll have a look at the chart in a second. It's not the sort of chart where you go, oh, that's really liquid. So that's one of the reasons they have. But the main reason, company valuation. The market doesn't appreciate us. We should have a higher value than what the market is saying. So they're of the view that the low liquidity is not helping either. That can be harmful, particularly if you're not performing. If you're not performing, the share price will tumble no matter what, no matter the liquidity. But if your share price or if your company is performing and you have low liquidity, share price will just zoom higher. So this has everything to do with the company's performance, not the liquidity. Anyway, the board is of the view that low trading volumes have had an adverse impact on the share price. I say nonsense. To this end, the recent trading price of the shares implies a valuation that has been and remains consistently and materially lower than the true value of the business. This is potential to anchor the price at which a prospective exit might be achieved for shareholders to current trading patterns. What an absolute bunch of nonsense. The board is confident that the company's valuation has a greater prospect of growing towards the board assessment. I don't know how, because research shows that a private company is valued much lower than a public listed company. And they say assessment of true value as an unlisted company. This is because, as an listed entity, the current soft capital markets for small and micro cap listed companies negatively affect the company's market cap and preclude the company from being valued based on its fundamentals, as would be the case for an unlisted entity. You have no fundamentals. You're barely profitable, if profitable at all. Let's have a look at Adacel's financial history. If I just had a look at their financial history, would I be interested in this company? Let's have a look. So let's have a look at the income statement, revenues. Look at this. This is revenues over the last 10 years. It's done nothing. There's no growth. It's gone sideways. Are they profitable? It might be profitable slightly. Some years profitable, some years not profitable. Let's have a look at the net income. Yep, some years profitable, some years not profitable. They had looks like the best years was 2016, 17, 18. If I saw these metrics, revenue and profit of a company, I would not own. Why would you own? There's no growth at all. So the market doesn't like this company. And the management believe, the market doesn't understand this company. Just have a look at the financials, have a look at the fundamentals. There's no growth. Anyway, another reason they gave is capital raising and then cost savings. They're going to save $626,000 a year. If that's one of the reasons you're going to save some money, then there are more worse problems in your company. If you're going to save that amount of money, management time and effort, okay, maybe, I don't know. And the consequences of delisting, share price is going to take a massive tumble because shareholders don't want to have shares in a company that's not listed. They don't want their money in a company that is not growing and it's really hard to get out of, almost impossible to get out of, so they sell. And this is what happens. Now, the interesting thing, share price down, was it 30%? 30 to 35%, we'll say. In fact, the closing auction is going to be any second now. And looks like the closing price will be at 30 cents. We have one more seller coming in, is fed up, selling at 30 cents. So more than likely, share price will be down about 36%. And unless we see some buyers coming in, which I don't think we will, closing auction should be any second now. And I'm just going to refresh any second. There is no exact time where the closing auction finishes. It's within a certain 15-second period, which we're in that right now, I think. I forget exactly what time it is. It's like 3:10 and 15 seconds and 3:10 and 30 seconds. So it's going to happen any second now. There we go. And the share price has closed. It says still 32 cents, but if you look at cost of sales, there it is. It's just adjusted. 30 cents. So share price is down 36%. This is exactly what's going to happen when you announce you're going to delist. Share price will take a tumble. So if you think the shares or the company is undervalued now before, what do you think now? This is a consequence of saying to the market, we're going to delist. And particularly when one of the reasons you're delisting is valuation reasons. Now, research has been done on this. In fact, private companies tend to have a 30% discount, all things being equal, over a public company. So there is a 30% premium to being publicly traded because, funnily enough, the main reason, because of that disparity, liquidity. So you're actually destroying liquidity. Hence, the valuation of your company is now lower because shareholders have a much harder time getting out. I would not want to be a shareholder of this company from now on, and that's why people are just selling en masse. 1.5 million shares traded. By the way, no problem with liquidity today. 1.5 million shares traded, when historically you don't see much. In fact, I'm going through the trading history. Typically less than 100,000 shares traded, and I'm trying to see if there's. This is by far. We saw one day back in February there were 455,000 shares traded. Share price on that day dropped 25.7%. So it was a negative results, by the way, financial results. So again, release positive results, show some growth. Then the share price won't be languishing. So let's have a look at the chart for Adacel. So this is the daily chart, and it's been looking ugly ever since that negative day in February. In fact, it was looking positive before that. So you just see negative results, negative financial update. It destroys sentiment. Share price has been dropping ever since. Share price down 30 cents. If you have a look at the weekly chart, Share price has not been lower. Share price did get to 30 cents way back in 2020. Look at this chart. This is the chart of a local company. There was a bit of excitement in this company back between 2015 and 17, but it didn't last very long. Anyway, so that's Adacel coming in number one. They've decided to delist for silly reasons. When you say valuation is one of your main reasons, the board should just move on and never be a part of another listed company on the ASX again. Okay, let's have a look at a few of your comments, because I have a little bit of time, I suppose. Rick Thelian talking about why he thought yesterday was down day. North Korean tensions, planning to go into Ukraine. You could be wrong, you could be right, just don't know. MTS, which is that Metcash, recently had a capital raising at 335, hence maybe overreaction to the downgrade. So capital raising 335. Let's have a look at the chart for, actually the chart, not the MTS. $335. Actually, this chart, the more I look at this chart, this is a breakdown. This is a really negative chart. Metcash, share price broken down. There might be some value, maybe. So maybe there's some value in Metcash at these prices. Last time the share price was this low was way back in 2021, when the share price was in a nice uptrend. Share price in a downtrend now. No rally today at all. So maybe there is some value for Metcash. Maybe. I don't know. Philip, EZZ down to 50-day moving average in a long time. You buying, holding, selling, sold. I should have trimmed more above $4 and still overweight, so hasn't to buy. Up 10 in tracked, it's sitting on its old high. Okay, so I did take some profits at 460. And in fact, when I took some profits, a few days later, share price did get up to 490 and went, oh, man. So it's one of those instances. I just didn't like how the share price was rallying way too hard for me. So I thought it's probably time to take profits with EZZ. I've held shares for a long time, highly in profit, not quite a 10-bagger, but so I sold some shares on the 1st of October. And then a few days later, share price got to 490. I went, dang it. And then we've seen a fair bit of weakness since then. Now, in saying that, 2 really big down days in a row. I'm not sure what caused these 2 big down days. A little bit of negative sentiment, short-term negative sentiment. We see the share selling. On open yesterday, remember that bad day, the shares initially opened down about 5%, if I remember correctly. So maybe it was 3%. And that did lead to a little bit of panic selling. So I'm going to call it panic selling. This horizontal line was a very important line. That's the old highs the company saw back in September, where there was a little bit of selling. And it's held strong. In fact, the share price today is up, looks like. EZZ, let's confirm it. Up 4.11%. Now, this could be just a little bit of a bounce after 2 really big down days. Not sure what caused those down days. But I think one of the reasons is just profit taking. Share price has gone on a beautiful run. But, yeah, I just took profits 460. Will I buy 340? Could be a nice little buy point. So that would have been yesterday, because the shares closed yesterday at 341. Maybe this is the end of the panic selling. Don't know, but overall, the chart still looks positive. You can see back here, back in July, there was a bit of selling. Share price went from 240 down to 160. So we're talking about a 33% drop in share price. And the share price did find support within this shorter-term moving average channel. So that's moving averages between 25 and 50. So it did find some support there. And there was a really big down day on the 29th of July, down 15%. And then share price went sideways for about 2 weeks. So I'd like to see that similar pattern here happening. So I don't want to see much weakness moving forward. So if we do see the share price drop below 340, that would be a negative move for EZZ. So anything I do more than likely will be buying than selling more, but I could sell a little bit more if I see further weakness. Method 341 says the ASX is looking really weak. Be careful out there, guys. Let's have a look at the XJO. Does this look weak? So one down day yesterday. I can sort of understand why you might say yesterday was a bad day, because down 1.6% on really nothing. And that could be a sign that we are a little bit toppish, that maybe the littlest of things have driven some investors to sell. But I wouldn't say we're weak just yet. I need a little bit more confirmation. If we fall below 8,100, that would be a negative step in the wrong direction. Well, a step in the wrong direction. That would be a negative move. The reason I say that is because that was a sort of a resistance zone. Now it's become support. So 8,100 is a key level for me. If we see it fall, the extra fall below that, that would be a negative sign. I wouldn't say it's really weak, but there are some signs out there that wouldn't lead to me to become nervous, but just aware, being aware. Devash says, please have a look at BPM, 30% up and down in 2 weeks' time. BPM, what's BPM? BPM is BPM Minerals. I don't know anything about this company. And so up 72% on the 18th of September. Did I have a look at this company? Yes, I do have it in my high volume spec. And then the share price yesterday down 29%. Did they release anything? Let's have a look. Further assay results extend the Louis gold discovery. So that has driven the share price down by 20% or so. Personally, I am not a fan of these type of companies. I'm not a fan of mining, exploring companies. Now, you can get really good returns if you hit pay dirt, or maybe the company hits pay dirt. But I think you need to be a big expert, maybe not big, but you need to be an expert in understanding drilling results, that sort of thing, and also charting, technical analysis. I did not like how there was a lot of selling on the 18th of September. Share price actually did rally a fair bit after that, but it wasn't really a breakout. And then we had that negative announcement yesterday. So really good volume coming in, but overall, I'm not the biggest fan of this chart. So BPM Minerals. So do you understand the company? If you're in this for the long term, that's probably the biggest question. Do you understand what they're drilling for? Do you understand the results, that assay results? If you're in this just because of a trade, why? What is the reason you got in, and why would you get out? What is your reasoning behind getting out if you want to get out? So you need a plan. I'm a big proponent of having a plan when you buy. So you buy, have a plan. And the first thing you should have to ask yourself is why I bought shares in this company. No matter what reason why you bought, why, and why would you sell? So always have a get out strategy. I know there's some people out there, some experts who say you should never sell, but that's ridiculous. I suppose it's not. There's always different strategies out there. Anyway, yeah, it's just a positive result, negative result, share price up, share price down. Thank you. I love cricket. Landy Lee says, thoughts on EOS, Electro Optics Systems. Method 341 says junk. For what reason, says Landy Lee. It never goes up, says Method. Saha Splendid Analysis. Okay. So I have a small portion of shares in this company, but I'm not trading it. And there's a reason I'm not trading it, because share price is going up and down, up and down, up and down. There is actually no trend right now. There's all these short-term trends, but I want longer-term trends. So that's me getting out for my trading position at $1.70. So I was trading this for a while, and I got out. When was that? That was in March. So that was over 6 months ago. And since then, I've seen no reason to get back in. Longer term, I have no thoughts about this company. Longer term, this could be a big company. It may not. I just don't know. So the whole reason I do have a little bit of a holding in this company is just because of profits I took. So I was a long-term holder, and I sold a lot. When I say a lot, I sold most of my holding at about $10 back in early 2020. At that point in time, just before COVID-19, I was selling a lot and taking profits. But I maintained a small holding just because I thought this company had potential. My thoughts on this company have changed since then. I think they have potential, but maybe not as much as they did, because in my opinion, COVID-19, I won't say destroyed this company, but it really hindered this company from growing. That's why share price has been under pressure. But at this point, just by looking at the chart, no interest. There's no trend at this point in time. Would I say it's junk? I wouldn't say it's junk, but well, they do with their lasers. They do look for junk in space, literal junk, I think. Just James Dane says bond traders are expecting more risk in the future and demanding bidding up yields. That sort of makes sense. Okay, and that's it. That's all the comments I've made or need to reply to from yesterday's videos. And there's another one. Don't overreact to announcements. Okay, I can't remember doing that video. Anyway, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.